Visa can be one of the best investments for the next decade, and possibly one of the strongest long-term bets heading into 2026. I will show you 3 key reasons why Visa stock may be one of the most perfect long-term investments. First reason, Visa is a perfect money machine. Visa doesn't make money like a bank. It does not depend on lending. Visa makes money every time a transaction uses its technology. Visa simply takes a small percentage from each transaction. That model has allowed Visa to process over hundreds of billions of transactions globally, and to move more than $14 trillion in payment volume in 2025. This is why Visa generates enormous revenue without needing to reinvent itself constantly. Now a warning. If you look at some financial platforms, you may see something shocking. You may see net income margins close to 50%. That number looks unreal, and it should raise questions. When we go directly to the SEC files, we see the truth. Visa reports net revenue, not gross revenue. Net revenue already subtracts customer incentives used to increase transaction volume. Once those incentives are properly accounted for, Visa's real net income margin is closer to 36%. And let me be very clear, that number is still extraordinary. Very few companies in the world operate at this level of profitability, but you must learn this. Companies will try everything to get you to think that they make more money than they actually do. You must verify the fundamentals. If you truly want to know whether a company creates value for the shareholders, you look at EPS, earnings per share. Over the last 10 years, Visa's EPS has grown consistently, even including the slowdown during 2020. And when we calculate the long-term growth rate, earnings have grown by over 18% annually. This tells us that Visa is generating more profit per share year after year, and that is exactly what long-term investors want to see. Reason number 2. Visa never wastes cash. Great companies are revealed during bad years, and in 2020 was a stress test for every business on earth. Visa's revenues declined, transaction volume slowed, but management made a smart decision. They increased long-term debt at historical low interest rates. Visa secured cheap capital when money was almost free, and instead of wasting it, they waited. They did not overpay for acquisitions, they did not explode for dividends, they did not aggressively buy back stock just to impress investors. They stayed disciplined. As a result, by 2025, Visa holds roughly $24 billion in cash. Now, you might worry about that long-term debt. When you look at Visa's balance sheet, the picture is very clear. Cash, restricted cash, and short-term investments nearly cover the entire debt load. Visa could pay off all of its long-term debt if it wanted to, immediately. Reason number 3. Visa follows the rule: be everywhere. Visa's greatest strength is not branding, it is infrastructure and presence. Visa has access to over 4.9 billion payment credentials worldwide. This includes cards, tokens, phones, watches, devices you use every day. Visa is embedded into nearly 5 billion payment-enabled tools. They operate in over 220 countries and territories, processing hundreds of billions of transactions. This scale is not accidental. This is a moat that is nearly impossible to replicate. Visa is the bridge between the consumer, the issuer, the acquirer, and the merchant. They sit in the middle of global commerce, and they are not done. Emerging markets are still transitioning into digital payments, and Visa intends to be present in every one of them. Now, many investors ask about Mastercard, and that is a fair concern. Mastercard is a great company too, but the numbers matter. Mastercard processes significantly less volume than Visa, and when we examine its balance sheet, we see tighter financial flexibility, higher long-term debt relatively to cash, less room for error, Visa, by contrast, can withstand multiple bad years without sacrificing shareholder value. That difference compounds over time. I am not a financial advisor, and this is not a financial advice, but Visa represents what long-term investment is about. Consistent earnings growth, massive scale, capital discipline, and an almost unbreakable business model. If you don't want to pick individual stocks constantly, if you don't want to rely fully on the S&P 500, Visa is a company worth watching. Personally, I will pay close attention during market pullbacks, especially if prices ever turn to lower ranges. But even today, Visa remains a serious long-term contender because great businesses do not need perfect timing. They need time. Have a good day, and always keep learning.